Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com, and welcome to today's recap and look ahead. So we came in today, the futures were down, 10, 12 handles off the lows, and in the first part of the day, you had a push lower. We almost tested the 8-day moving average, which I've been saying would be a healthy thing to do. Markets went very far, very fast, and traders want some type of pullback. We don't like when things go up in a straight line because you feel like you sold your stuff too early and you start shorting and you can't get out of it. But at least the last 4 sessions or so, they've given you this two-way trade where, you can make money surgically short, and then also, when you see that instead of pressing lows, buying in those areas, they've been kind of bouncy. And that's what we've seen since pretty much Friday. The real money today, which was a little surprising, was actually the reversal in high beta tech. But it didn't last long. So again, got to take your trades. For the last 3-4 sessions, high beta tech was weak. Yesterday they, fell apart somewhat. So this morning when they were down, and the market went down and the spiders were going lower, they caught bid and they didn't go lower. And then you had a really nice scalp trade. Yes, do we scalp? We do scalp. You can make money in Facebook when it goes from down $1 to flat, up a little to up $1. That's a nice range. Google was down 5. Went flat, went up 3, was up 10. That's how you make money day to day, trading the ends of the ranges. If you're just saying, I'm going to short every rally in high beta tech because at some point I think the FANG names are going a lot lower, then you got to sit through things like that. It all depends where you want to live. So anyway, let's go to the charts. You go here. This is a chart of the spiders. So if you look at the chart once again, you will see that all in all, here's your double bottom. You had your move to resistance where it came up and hit resistance, came in, gave you this buyable dip, held the 8 and 21 day, 3 days up, held the 8 day, big engulfing day, and then finally, you had this, this kind of new ascending channel. It seems like you had your first down day, your first day that the market led. You make a lower low, right? Here was a low, higher low. Inside day, first time below. Does that mean we're going to hit in 195 again? Does it mean we're going back to the lows? No. Does it mean maybe? It'd be nice to, see a move to the 8 day, maybe even to see a little spot here so you don't feel like you're chasing, and that would help work off the oscillator that is at like plus 50, that was at plus 90 here. So that would make sense. So we'll see how we open tomorrow, to figure that out. The weakness really came today from the XLE. Okay, XLE opened the week, couldn't rally all day, and gave you a pretty potent bar. So this was your sell signal if you've been trailing. Most guys that my style, I was out of it a little early, upset. So again, in the pain trade, like I was in here, I think I sold that day. So when you have 2 more days, you're like, oh, that's kind of upsetting. But it's better than chasing here and here and then getting stopped out into there. So this powerful move, all in all, though, just came back to the 8 day. That's why you don't buy things that are so extended from it. So now we'll see if this 8 day holds, or does it wait for the 21 day to play a little catch up, considering that's what happened here. Here it went through it and came back, but that's when it wasn't as extended. So we'll see how we open up tomorrow. There's some oil numbers later and also tomorrow morning. USO, as ugly as it looked today, not the biggest deal. Okay, basically it did engulf yesterday, showing you some buy momentum, decrease. So right here, if you were looking for a momentum tight move, this bar probably says it should hit the this spot right there at least. I don't know if we open up and then it trades through, or open down and you could buy it. We'll see what happens tomorrow. But all in all, again, when something that reclaims the 8, look what happened here. Like this was a pretty engulfing day, but look where it came from. And then what did it do? It held the 8 day and continued. So this is very stretched from there. So you would think it comes back to it and hopefully stays with that trend. The IWM, the same thing. Everyone's like, oh my God, the Russell. Good. This has had such a big move, since the lows, that this is what traders wanted. There's been a lot of traders in pain trying to short that thing. So here was your, actually it wasn't even a double bottom. That was a fake out low right there. Then you had your move up to resistance. And then here was your 99 that we talked about that held. And here's when it took this out. And it's been, just straight up into a big supply zone. So with that being said, today I would say is engulfing. It's a little bit ugly, but we're not even at the 8 day. And this is where the 21 days. So that's how extended we are. So that's why the last day or two, when I'm like, oh, I'm a little, flat-footed or I'm a little thrown off because, you know, I like to buy when things are calculated. I like to buy maybe on a red dog reversal here or maybe here, you know, or sometimes when you break out, something like that. Rarely after 4 or 5 days, I'm thinking about buying. I'm usually maybe trying to short a little bit like I was 2 days ago, and then I covered into this last bar. So anyway, you know, this is today. You have the 8-day a little bit further below, 21 down there. I'm not sure, you know, what this bar leads to, but something like this should shake up the longs a little bit and give you a little bit more. So you go to the banks. The banks were kind of weak all day long as well, but didn't, you know, fall apart, and it's just how extended they were. The XLF, let's take a look here. You know, it gave you this breakout trade and down there. That's why you want to buy day one, and then you pick, you know, when you want to get out. And right now what it did is it pulled back to the 8-day already. So we'll see. Maybe it gives you a little bit more. I'd like a little bit more. Some kind of bottom red dog reversal tomorrow would be good, and then we resume or not. So we shall see. Some of the banks that I went over today, and I gave you some prices. Goldman Sachs, you know, you had your topping tail. This has been a weaker one into the 50-day. When we said it can get to, 159. Where did it go? Oh, close, 158.55. And now it's down, you know, 7 points. So maybe tomorrow we get some kind of tradable bounce into this zone. JP Morgan, we'll see if there's a tradable bounce also. This too, you know, gave you a really nice wide range bar breakout here, a little bit of follow through, and now in a little bit of a corrective spot. So this already closed a little bit below the 8-day. We'll see how it handles this spot here. So, you know, it could be a setup decently. Let's talk about high beta tech Facebook real quick. It did, you know, break this ascending channel that I've talked about all the time with Annabelle, right? If it breaks below this spot, you know, get out of the way. Some people got short. If you got short 2 days ago, yeah, you know, you didn't have much time to cover. Okay, that's why in my chart that I posted on Twitter, I said this is support 1, this is support 2. Okay, and it gave you a nice little quick trade and then got rejected into resistance. So we'll see what happens. We'll see if it stays on the right side of this trend line moving forward. If you look at the 5-minute, you'll see how quickly that happened too. You know, not too much pain there. Here was the opening, gap down, put in support, and then this could have been your nice little cash flow trade of the morning. Boom, filled the gap, and then what did it do? It held, and then took out the afternoon high and gave you an extra push. I think that's when the majority, you know, were out of it. And then, you know, hit its high and then just kind of bled lower all day. So this was, you know, your power packed move. And then I actually gave you another little trade here. Remember, I was talking about on the VTF, I was trying to be long here, and gave you at least another 50 cents. So here's your gap down, bull, flag, continuation. And then, you know, from there, didn't do a heck of a lot besides bleed lower. So that was a quick one. You probably see the exact same pattern on like Google and Amazon, where you had a gap down. Look at this gap down. Thank goodness they trade together, because, you know, Google was actually faster. So quick move, took out this spot also, and, you know, so from 704, if you missed this first spot, if you go to the 3-minute, you'll see how it flagged. You could, after the opening printed, you know, 712, they gave you another $6, and then it also flagged a little bit and then made a new high before, you know, saying that's that. So here's a nice tradable setup that happened from the open till about 12 o'clock. Same thing happened with Facebook, and the same thing happened with Amazon. And then also, but, you know, in that part, you know, you see kind of when things change, because I was on my way to the gym at 11:30 and I saw the market rally further. You know, I think the spiders were like at 199.20 when I left, and they were at 199.70, and I didn't see high beta tech at highs. I didn't see Facebook at highs. It was well off the highs. Google wasn't at highs. Amazon wasn't at highs. So I'm like, ooh, they ran out of gas. Then all of a sudden I came back at 2:30, and they were half of where they were. And then by the end of the day, when the market was getting weaker, they were flat. So don't go back to trades if the volume's light and it's just a quality setup, because you don't want to give away money. If you go to gold now, you'll take a look here. You'll see that, you know, that this is the opposite. You had your gap up right here, okay, and then boom, traded into the gap. So if you sold it, congratulations. And if you missed that, you know, you had your rally back up, couldn't take back more than 50% of this, and then you could have had your second short right there, and then it closed, you know, relatively weak. I sold my gold a few days back. I think it's too choppy for me to trade right now. I actually sold into this topping tail, but I didn't get short. But now we'll see what happens here. You know, see if this holds or not. If this doesn't hold here, here's your 8-day. We'll see what happens there, and then your 21-day, is below. So we'll see what this all means. I know some guys were trading the gold miners, and I think they even had a more harsher move. But again, look how extended this was from the 8-day. But this is a pretty gross, wide-looking bar that if I was long it from when it broke out here, that's at least one sell signal. But we'll see what's next. Here, this was a sell signal too, and then it held. So you've had a few of them. This was a kind of a sell signal, and it held. So I guess, if you're anticipating this 8-day break and going home, cajones to the wall short, just be careful that this is held the entire time. So you're anticipating and trying to make some money before it happens so you don't miss out. So you got to be careful. Same thing that I'm kind of thinking about with the spiders. I actually shorted a little bit after hours, but recently, every time, it hit the 8-day, it rallied. 8-day, let's go back to before I end this call. Here, big rally up, hit the 8-day. If you went out short, you got squeezed. Went sideways, looked like it was going to fail, hit the 8-day, squeezed. Little follow through, came into the 8-day, up. So that's kind of like what's going on here. So that's why I'm going to be very light overnight. And I covered, I think, the last minute, and then it popped up 50 cents after hours. So I'm like, I'll short a little bit, considering that I would think that the XLEs and IWM have another day maybe with oil. So trying to be a little extra cute here. So with all that said, it's only Tuesday. There are things to do. Don't get frustrated. Look at the tape. Trade what's in front of you. And don't drown out the noise. A lot of people right now are on TV saying the risk rally is over, which it might be. A lot of people are saying we're going to revisit the lows and break them. Could happen. If that's going to happen, we got to break below the 8-day, stay below it, break the 21-day, stay below it, and you got to see a lot of things add up before that. And then you have the other camp saying we're going to rally to 2100 and blow the doors off of every short that says we can't go higher. Okay. If we stay above the 8 and 21-day, maybe that happens. So at this point, we're still working off the oscillator, and I'll feel more comfortable if we get a little closer to neutral versus 90 plus 50 plus 30, holding a portfolio of positions. So anyway, have a good night. See you tomorrow morning.